The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the June 18th wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a terrific Tuesday. Let's make sure that we do all that we can do today to have a wonderful Wednesday. My outcome here during the next couple hours is to teach you how to master the tools for trading, and that includes the tools of the mind, because when we can truly master the tools of our mind, we begin to think like a strategist. And that's really important when it comes to really everything in life, especially trading, because while most people focus on tactics, you and I know that to really master life and achieve our goals and dreams, we've got to always think like a strategist. So tactics need strategy, and strategies need tactics, which is why today you'll hear me use tactical tools like AB equals CD patterns and Fibonacci expansions and retracements, Gartley butterflies, and of course candlesticks, the signs that the bulls and the bears make for each of us for every trading session. But the real key to trading and investing, the real key to get our money to work harder for us than we do for it is to have a strategy. And that's what I call mastering probability, because using tactics without strategy is a recipe for failure. And failure, folks, it's not an option in our playbook, which is not to say we don't incur losses, because we do, as it's a part of any successful trading strategy. It's what we call spoilage, just as running a household means throwing out food that has gone bad in our refrigerator. The two are one and the same. And, of course, when it comes to trading and investing, we always use stops, which means we always have an exit strategy that covers both sides of the trade, what's referred to as a bracketed OCO order. One cancels the other. And then by using stops, well, we can create our system expectancy, our ultimate confidence tool when it comes to trading and investing. So today and every day, let's help everyone in our life to think like a strategist, because strategists, they slay the tactician all day long. So let's take a moment and review one of our tools to help us think like a strategist, the tool I call Your Hidden Treasure. You know, it was W.G. Montgomery who wrote about two brothers who landed in New York in 1845. The older brother had learned the trade of making sauerkraut back in Germany. And hearing of the possible fortunes to be made in America, he set out for California, where land was cheap. His goal was to grow cabbage, make the cabbage into sauerkraut, and begin a business. His venture was successful, and eventually he bought additional land, planted more cabbage, made more money, and he was content with life. The younger brother, he remained in New York, where he worked during the day and attended school at night. He took a course in geology and learned about rocks and soil. A few years passed, and one day he set out to visit his brother in California. Upon his arrival, the older brother took him into the cabbage patch to show him what good crops he was growing. The younger brother began picking up handfuls of soil, pressing it in his fingers, throwing it down and picking up more. "This is mighty fine soil you have here, brother." You know, they both walked down to a nearby stream so the younger brother could wash his hands, and while washing his hands, the younger brother reached down and picked up a handful of quartz from the bottom of a stream. And he pointed to this dull yellow piece. He said, "Do you know what this is?" Cabbage King shook his head, "No." "That's gold. That's gold," said the younger brother with excitement. "You've been growing your cabbage patch, or cabbage, on a gold mine." It's a true story, folks. One of the richest gold mines in California was found in a cabbage patch. Now, our mind can be just as rich in unseen resources as that cabbage patch was. It can be rich in unseen gold, folks. Open yourself up to new ideas. Progress and growth, they're possible. If you always do things the way you've done them, well, then maybe they're not. It's wonderful Wednesday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, futures relatively flat out here. You've got the Dow futures totally flat. They're trading at 16,729. S&P futures up 25 cents, trading at 1934. NASDAQ futures up 5 points. They're trading at 37.77. Russell 2000 up 80 cents at 1169.70. Gold off 80 cents. Silver's up, really, it's flat out there at 1974. Light sweet crude is up 32 cents. It's trading out at 106.69. The euro up just slightly out here. So a flat-ish market. Let me take a quick peek around the globe out here. Let's see what we've got going on overseas right now. Over in Germany, we've got the, where is it? We've got the DAX is up 17 points. The FTSE's up 21. In Asia last night, the Nikkei was up 139 points. That's just under 1%. Hang Seng was off 21 points. That was basically flat on a close at 23,000, 181, so being down 21 points. That's not even a sneeze out there. Shanghai was off 11. That was down about 0.5%. Hey, our call number is 877-927-6648. Let me see if there is things that are moving today here. Let's look at the pre-market. We've got Air Products Chemicals. APD is the ticker symbol. Nice jump here this morning. Closed at 121.60, trade down at 128 and change, up about 6% here this morning. Looks like they have a Rockwood executive. What do they got here? Just one of the guys stepping down, somebody stepping up, and the market is responding positively. We've got Adobe products, great products out there. And if you use Photoshop and other things like Photoshop or Adobe-type products out there, it closed at 67.54. It's trading at 73.40. That's up about 9%. Let me see if they're out with earnings out here. Looks like they generated net income of $88 million. Versus 76, $1.07 billion versus 1.01 in revenue for the second quarter. So that's up nicely. FedEx, FDX is a ticker symbol. It closed at 140. It's for 140.31. And it is trading out right now up 3%, up $4.59. To the downside here, you've got ticker symbol NGL Energy Partners. It is trading at 42.92. This could be a challenge today because my throat's got some feathers in it or so. But I'll do the best I can. It's trading down 6% off 275. Lazy Boy looks a little lazy here this morning. LZB is the ticker symbol. It closed at 24.84. It's trading at 22.13 right now. That's off about 10% out there. We'll check in on some of these stocks here, but let's go take a look at what's going on inside the futures market. Let's look at a couple of different time frames out here. I use three different charting tools out here. All are great charting tools. All have unique benefits out there, and I suggest each of these charting tools to anyone that is looking to trade technically out here. The first one I'm going to put up on my screen here happens to be what we were looking at before. That's the e-signal system, which I've been using forever as my data feed, just simply because of the accuracy of the data, and the charts offer their own unique skills as well. What we've got here right now is Ensign Windows. And Ensign Windows is a very cool tool that they've got for being able to easily draw the Gartley and butterfly patterns. That's what I have on my screen here right now, so I'm trying to put on my screen here right now. It's the ES Mini. It's a 120-minute chart. And what you'll see here is you've come from the swing point high that took place at 12 noon on June 9th. That was out at 1947, down to the low that was put in here at 4 p.m. on June the 12th. If you go from the high to the low, the 0.618 retracement area is right around 1936. In fact, if you want the exact number, let's go give you the exact number for those of you that are perfectionists out there. It's 1935.89. Now, what we also have as far as a conjunction is a Fibonacci expansion number, the B to C swing point, that expansion. Well, the 1.618 expansion of that comes in at 1936. So what we have going on right now inside the ES Mini on a 120-minute time frame happens to be a 0.618 Gartley cell pattern. Now, the Gartley cell pattern, interestingly enough here, for me, this is a tactic. This is a tactical tool. A strategy is making sure that you've got the bulls and the bears communicating to you that which they might do. Well, the first reversal signal that we saw here actually took place this morning at about 4 a.m. Little bearish engulfing candle. And it came right back the very next session with a shooting star out here. In essence, that's a confirmation. So this 1936 level is very important. You've received a sell signal. You know, I like how Basil uses sell signals and sell modes out there. I will have to say this has not moved into a sell mode at all, because if you take a look at these two moving averages, they are still in bullish formation. If price is able to move above this level, it should rise to the next floor. Its next floor is going to be the 0.786 area right around 1941. So somewhere between 1936 to 1941 is likely where the ES Mini will travel to. If, on the other hand, this is a sell signal that's going to go to a sell type mode out there, you'll probably see a movement down into about the 1924 area, but 1928 is an area that we want to pay attention to. Let's go all the way out to British Columbia to our man Rick. Rick, thanks for calling. Thanks for holding. How you doing this morning?
Hey, really good, Steve. How you doing today?
Excellent. Thanks for asking, except for some feathers in my throat here. So,
first of all, I want to congratulate you and your nation on your soccer win.
That was a great game, wasn't it?
It was, and I guess Ghana beat you twice, and it was nice to see, I play a lot of soccer when I was a kid. We're not a real soccer nation, but, we play a lot. Anyway, you got a commercial coming up.
I do, yeah. Would you be kind enough to hold on, and we'll come back. We'll talk about soccer. We want to hear about Rick's soccer experiences, and then we're also going to take a look at the small caps. We'll take a look at the IWM. Steve Rhodes, Rick from British Columbia. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're on the line with Rick from British Columbia, who is, by the way, he is the aficionado of the Head and Shoulders patterns out there. In fact, Rick, I've got some questions for you because I am not an expert when it comes to the Head and Shoulders pattern. So, what first you trade that often? Is that one of the predominant patterns?
You know what? They can fool you too, because sometimes what happens is you start seeing people on TV talking about it.
Okay.
And they don't always work. Very often they work if you break the neckline, if you know what I'm saying.
Yes. Okay.
You know, like let's put the cues on, for example. And
I can do that.
But what I'm going to talk to you about actually is that I think we're going to rally going after the FOMC at 2 o'clock your time Eastern.
Yes.
11 o'clock our time Pacific.
I can buy that for sure.
If you look at the cues,
yep,
you put a daily on.
Okay.
And you were actually, I think it was you talking about the cues.
I've been talking about the cues pretty much since April 15th, and that they gave us a real key reversal signal out there.
You put a 3-month daily on there.
Mm-hmm.
You see the little Head and Shoulder that we actually completed perfectly, the neckline at 88, and look at the volume from 88 on. I mean, absolutely on fumes, right?
There's no question. The markets have gone up on light volume, and it's why I spent some time taking a look at saying, that I know that when it comes to business, and I take a look at this as a business, the key to any business is marketing and innovation. Uh-huh. And so then I started taking a look at it. I said, okay, I got to innovate here. And by innovate, I meant we've got so much data that's available to us, or maybe there's other ways to take a look at a chart. Other ways that we can say, okay, volume's important, but what's the role that it plays now? What's the best role that it plays now? And and how else do markets go up, and how can you use those to understand the momentum behind it? And that's really what I've done out there. But you trade the Head and Shoulders patterns often. I mean, I would consider you to be an expert at it. You can look at this chart and see this more clearly than I can. Who's the so-called father of the Head and Shoulders pattern? Do you?
I never really studied that aspect of it.
No, okay.
But I just know a lot of people talk about it, and it's you can see on a 3-month chart. I mean, you could use that in a classroom if you were teaching Head and Shoulders, if you indeed believed it, right?
Yeah.
But anyway, Steve, what I wanted to talk to you about was the IWM.
Okay.
And
yesterday had some pretty nice volume, didn't it? It's had some nice volume base on the way up.
And if you put it on a weekly.
Okay, I can do that. Go ahead.
And like Tom always likes to say, he likes to see volume up there. Now, last week, you could call that a doji last week, and dojis are quite often either halfway moves up or they're tops, right? Mm-hmm. And if it is a halfway move, it's going to target that high that has volume up there at about 120.60. Okay, and now with that in mind, and if you could just go to Goldman Sachs one more, because sometimes it's nice to watch a couple different things. And I got Goldman Sachs, which was the real dog.
Yep.
And it put it on a weekly. It also has a doji going to about 175.
Yes.
You know, and that thing, in 2 days, it can move fast. And if you put it on, so that's a doji that targets that. And if you put it on a daily, you could, even though the volume wasn't huge yesterday.
Well, you had a nice wide candle. Nice wide candle yesterday.
You could say that's an ABC up.
Absolutely.
We took
out a swing point with volume. Took out June 10th with volume.
And so I still think the Qs are going to pull back to that 87 range and maybe lower. You know,
Mm-hmm.
I mean, if you really look at the market and you put the volumes on there, like I've followed volumes with Tom for many years, and for the first, I don't know, like about 2000, they work really well. You know.
Yes.
But lately, if you put like the SPYs, the IWM on quarterlies, on monthlies, I mean, we're due for a crash. I hate to say it, but the volumes are just pathetic.
Well, and that's where I use volumes where they still work on a consistent basis, is that when things do fall out of bed, that's where they find support. And that's logical. That's where they find support. That's where things will go ahead and pull back to, as to where those volumes are. And that's how I like to use it. I will say that the way that I like to use doji candles, Rick, especially as market is moving up, is not so much as a halfway marker, but if it's up near resistance, it's communicating to us that the market is getting tired. And if we see a lower close that following session or the following week, that's sending a fairly good message to us.
Yeah. Hey. Well, I just wanted to say the IWM retesting the highs and Goldman Sachs about 175, and then I think we'll probably have a top. And I don't even know if that's going to happen. But I'm just saying that's...
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow trading up 21 points at 16,787. S&P flat at 1941. Composite flat at 43.36. Russell 2,000 up 87 cents, trading at 11.75. New York Stock Exchange up $2. Basically a flat market other than the transportations. Of course, FedEx was out with numbers before the bell. They had a nice pop. So too do the transports out here. Leading the charge, the upside this morning. Air Products, Chemicals up about $9, 7%. FedEx up almost $6, up 4%. Adobe Systems up 9%. Amazon up $5. Shire PLC, I believe they were down yesterday. It looks like a little counter trend bounce here this morning, up $4. Insmed, INSM is a ticker symbol. That's up 32%. Is that an IPO? That's a heck of a nice move today, up $4 and change out here. No IPO. Insmed is what do they do? They're a biopharma company focused on developing, commercializing inhaled therapies. Looks like I could use an inhaled therapy today. However, they're dealing with serious lung diseases. I'm just dealing, as Al in the den says, I ate too much chicken, caught some feathers in my throat apparently last evening, and having to struggle to get them out. In any event, you don't want to hear about that. You want to hear about who's leading the charge to the downside this morning. Well, that's GWPH. That is GW Pharmaceuticals out here. That is off about 5%, down $4. Rockwood Holdings off 4%, down $2.86. NGL Energy off a couple bucks. Lazy Boy off a couple dollars. ConAgra Foods, CAG, down $1.67. Goodrich Petroleum up $1.59. Now, if you caught our last caller, Rick from British Columbia, I was asking him questions about the head and shoulders pattern. Our man Z in the den says that Edwards and McGee is the one who introduced the head and shoulders patterns to us. All different types of tactical tools that one can use out there. They're all great tools. You should really become a master of as many as you can out there, just to assist you in trading, not to confuse you about being able to take action. But we were taking a look at the IWM, and as we were going off the air into that break there, Rick was saying, hey, I think the IWM, I guess he was using the IWM, Goldman Sachs, the Qs as bellwethers for saying, I think the market may respond positively to whatever it is that Janet Yellen brings to the table. Now, let's go take a look at other clues out there that would really support that conclusion. One of those would be, of course, my friend and yours, the Euro-Japanese yen. Now, if we take a look at the Euro-Japanese yen, as the market was moving down, no matter how bad the news was out there, this is coming back into the lows back in April time frame out here, May time frame. What the Japanese yen, Euro-Japanese yen was doing was it's forming this, we talked about this in great length yesterday, this 0.786 Gartley buy pattern, which has worked. It's activated. It's made the first retracement level, first out of 5, which is the 0.382 retracement level. They hit that number, hit that target back here on June 9th. And then what often happens when you get to the first level, people are let off the elevator. Instead of continuing to go up in this case, because we're talking about a buy pattern, it'll come back a bit, make a retracement, give others an opportunity to maybe get in on the trade out here. Now, normally it doesn't come back and test the original takeoff area. In this case, it did. In fact, not only did it test, it got just a tad lower, and that was on June the 12th, but it didn't last but for just simply a portion of a trading session because it was back up there the very next day. Now, this pattern here directionally correlates really well to the U.S. stock market. How well? Almost like 100%. There are times when it diverges, and the divergence can last for a while, but the currency pair is the one that usually wins. I have to say usually, because I have found a couple times when it doesn't win the battle. But it's the absolute best tool out there for being able to help you navigate the markets, and from a liquidity standpoint, and maybe to help answer the question that Rick really posed, that I had to pose to myself and say, I need to innovate here when I take a look at chart tools and chart patterns out there, because this is nothing but a business, and every business is about marketing and innovation. We see it happen all around us. In fact, if you don't market and innovate, now let's talk about innovation at this stage, what's going to happen to you in business? You're going to die. And all we have to do is look around us and take a look at just simply, think about like this. I've got some headphones, some earphones in my ears right now, obviously, so I can hear callers and talk and so on and so forth. But go back to now. Let's just say go back to 1990. So we're 2014. So it's a little while ago. But in the 90s, in the 80s. Who owned the music business when it came to personal devices that each of us used, whether we were jogging, whether we were walking, so I'm just sort of giving you a little bit of a hint there. Yes, Al said it, in the Sony. Sony owned the market. Now, they owned the market, but what and they used to come out with new products all the time, but where they messed up was on innovation. They stopped innovating. And then who took over? Who started innovating? Who came from the doldrums? Who came from the dumps and overtook them big time? Yeah, Apple. And so if Apple doesn't continue to innovate, and innovation is not making larger screens, so going from the iPhone 5 to the iPhone 6 with a larger screen, and even they've had trouble, right, on the innovation side. Take a look what Android has done, Samsung, and so forth. My whole point here with regard to innovation, I go back to coffee. I can say, let's take a look at Starbucks. It's another great example. Before Starbucks was around, now I'm a coffee drinker, but before Starbucks was around, let's be real about it. People have been drinking coffee forever. I got myself through college by drinking coffee because I worked a midnight shift, went to school during the day, and just somehow tried to figure out what planet I was on. Where did that come from? Now, I know where it came from because Schultz used to work over at at Disney when I was doing things with Disney back then. And, he got it from traveling around the world. He got it from traveling over to Italy. He saw people in Italy, spending time going to coffee spots out there, going to coffee places, right? So all he did was he innovated. He created a community. He created a social place for people to go to, and that's the whole start. In any event, it's all about innovation. So that's where, when I came up with the Rhodes Momentum Trading Indicator and strategy and so forth, it was all about innovation. Because I learned that if I just simply only use these other tools out here, if I didn't innovate, at least for myself, I figured I was going to die to a certain extent. I want to be able to answer the question, hey, what are the bulls and bears communicating to us, and not just use only the standard tools that are out there. So, enough about my belaboring, but that also led me to understand what other correlations are there in the market. Why is it that a market can go up on light volume out there? Well, it's really about liquidity. How do we measure what the central banks are doing or aren't doing? Well, what I found is that the easiest way is go find a currency pair or currency pairs that are correlating to the markets and see what they're doing, because they're going to provide you with a great signal as to what's going on inside the market. Well, the Euro-Japanese yen just happens to be that currency pair. So in a long way around it, okay, my answer to you and my answer to confirm what Rick is communicating to us is the mere fact that the Euro-Japanese yen had made a nice buy pattern out here. And this buy pattern, unless it fails, it wants higher price. It's got higher price here today. It had a little bit higher price yesterday out here, and it's rejected the lows. And if this wants higher price, what this is signaling to us from a currency pair standpoint is that the market wants to still move higher. I've been communicating to you, my belief is, based on another currency pair. Now, I don't share this. I share this with subscribers. I don't share everything with the listening audience out there. Plus, I don't want you to think I'm all wacky. But there is another interest rate utility currency that I take a look at that is a really great leading indicator. When I mean leading, and it suggests that we don't see any kind of a potential market high until the middle of August. We're only at June, what is today, June 18th, June 19th, something like that. So we're talking about a couple of months out here before they're probably, now that doesn't mean things go straight up, but when I take a look at that, and then I come back and I take a look at the Euro-Japanese yen and recognize that unless this 0.786 Gartley buy pattern fails, the message here is that this wants higher price. And where? It made its first objective. Its first objective was the 0.382 retracement in the 140 level. 141, and that's got a long ways to go before it gets up there. It's a 0.618. That's a normal retracement. So it means that many of these selling opportunities in the market, many of these intraday retracements that we have seen out here really are buying opportunities. Now, well, I meant to send a message to David White there this morning. I haven't had a chance here over the past couple days to listen in on his show, but maybe even somebody out there in the day. He's got a great tool, an options curve, that when he gets certain indicators, maybe David's even listening, I don't know. And if he is, he can send me a message. I guess I can ping him. But I was wondering what his option curve is set at, which I would think would give an indication where the S&P ought to move to today, tomorrow, what have you. So if somebody in the den knows if he's got that, I was just kind of curious where that was, because I think after options expiration, that probably sets a pretty decent low in the market for the next move up. And that next move up probably takes us into July, into the July 4th holiday out there. Maybe we come back and there's another retracement or move sideways or whatever it is. I don't know. But I do see that the market moves higher in through August. Now, Rick was talking about the IWM, and I had mentioned if we take a look at the IWM, let's come back here and let's take a look at, so that was one tool. That was the Instant Windows tool. Here's the E-Signal tool. And I'm going to go back and we're going to take, they had mentioned quarterly. Rick had mentioned something about the quarterly. So here's the E-Signal chart out here. Here's the quarterly IWM. And here's the A to B equals CD tool. If we take a look at the A point on this, that takes us back to January 1st, 2009. 34.26 is the low on that trading session. Market makes a move up into the level of April 1st, 2011. Gets up to $86.81. Makes a retracement. That retracement was about a 50% retracement level. Now, what I want you to do is I want you to take that rubber band that you use to, maybe shoot paper wads or something like that. And I want you to take that rubber band instead of hitting a paper wad and hitting at your TV for the bozos that typically are on there. I'm not talking the financial community. I'm really talking about our politicians and folks like that out there. But that is a different story. I want you to take that rubber band. I want you to wrap it around your finger as hard as you possibly can. And I want you to back it off only 50% and then let it go. That has pretty good amount of energy still left in it. And when you only back off 50%, because a normal back off, a normal move is to the 0.618 to the 0.786 level, and then that says, hey, you're probably just going to do a 1-to-1 A to B equals CD to the upside. Well, in this case here, it's already past the 1-to-1 A to B equals CD. That would have given you a price prediction of 112.64. You're at 116.76 right now. No, on the quarterly basis, no reversal signs whatsoever. Last quarter's candle, it looks like a doji, smells like a doji. It's not really a doji. It's what's referred to as a high wave candle, which means it's kind of lost its way out there. Lost its way as it's coming into a resistance level, which is the next A to B equals CD pattern on the upside, which is 126.93, which is likely where the IWM wants to travel to, and it's at 116.76. And that's what the quarterly chart. And if I take a look at the strength of the C to D leg, because certainly for such an oversold market that we had back in the 2009 time frame here, that move off that oversold level on the quarterly base from the A point to the B point, you take a look at the C to D leg out here, price is really traveling along that same line. It is just as strong inside the small caps here for the on the quarterly basis in the C to D leg that we're in. So it's giving us every indication that it wants higher price out here. Now, interestingly enough, the other horizontal lines you see on my screen out here, the green, the light blue, if you can see it, the red, those are the market profiles, which market profiles work on all time frames out there. Market profiles on the quarterly basis actually had set up a unfair low. Looks like back in maybe October of 2009, which got tested but never got. There was never a close. We never saw a close below it. It acted as support out here. And in fact, the market profile unfair high, the most recent one that formed was back in July 2011. It's well above that. That's 86.11. In fact, any test coming down 86.81 is the number out there. That probably is your ultimate support, old resistance becoming new support out there. And I'm not suggesting that we're going to see that kind of move. I don't know what move we are or aren't going to see. I'm good with just going ahead and interpreting the charts and the data as we have them and applying them to each of the time frames to see what the signals are to give us a better indication of what the markets want to do. Well, take a look at the real buy opportunity that took place back here in October of 2011. And as the market came down and it tested that 58, 48-ish type area, which held as a support out here. So, using this tool here, now the great thing about the Signal platform is, you can purchase access to the TAS market profiles out there, and a great tool to also help you understand, hey, should I be long, should I be short, should I be neutral, just to understand your different trading styles out there. And again, they work on all time frames. If I switch this over to the daily time frame for the IWM out here, we'll see the daily profiles here for the IWM. Say the IWM is up against some resistance. It's unfair high, which is about 116.84. You're trading right now at 116.80. So yesterday it closed above the 116.80, but just slightly out there. Not exactly conviction, but it was coming to the swing point from June 9th, which had volume of 44 million shares, and yesterday it was approached with 62 million shares. Not too shabby. Continued closes above that unfair high, that resistance level of 116.81. That is bullish. It is most certainly saying do not be short. Now, if in fact the IWM closes below that unfair high, you could take a trade to the short side, but boy, you'd want to be exiting around 115.57, maybe 114.30 out there. But otherwise, its message, it was moving higher yesterday with volume. That's not suggesting that you take a short, by the way. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these three conditions. 1, choose only one pearl. 2, remove one pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Very flat market out here. I think we can most likely expect that to be the case through I don't know, the FOMC, usually they release their minutes right around 2:15, 2:30. So, during that hour, during that half hour after the release of the minutes, usually helps us to understand what the market is going to do, whether there's going to be any reaction at all. We took a look at the currency pair. Euro-Japanese yen is signaling to us higher prices as a likely outcome. It's really up against, it was up against, there were a couple squiggly lines that were on my screen. I'm not showing that on my chart here right now, and that's really some resistance, and that's really where it's priced right now, 138.63. So if it can get above that, that would be really signaling a bullish outcome. Look, if that's, intraday-wise, that's really, in essence, what's going on. If I take a look at an intraday chart out here, if I put the S&P futures on my screen, my screen out here, let's put the 120-minute time frame out here, we'll see that the ES Mini had flipped over into a nice bullish mode out here. It did that on this trading session right here, 10 o'clock in the morning. That was on June the 16th out here. And it's been in a nice bullish mode since. Real key here, this black horizontal line, 1928. In my work, that's an important support level. If we see the ES Mini close below 1928 today, that would signal, now we've got one of those selling opportunities that is short-lived. I would say the selling opportunities in the market, you need to be quick on the trigger out there. More likely what you should be looking at is selling opportunities and trying to find areas of reversals, areas of support, patterns, and so forth in order to take the long position, which I believe is where the market wants to head to, at least until the middle of August, as far as a time frame. But, as opposed to saying I've got a crystal ball and using other tools to help us identify where and how things go to and price projections out there, I, and you should too, always be willing to take new information that comes to us and how it is that we look at it. Doing what you know and knowing what to do are two different things out there. So never hesitate about getting into a trade, seeing it go against you or the reasons that you got into it, to flip your position, to get out of the trade, because it just all of your conclusions that you used to get into it have now vanished, and therefore you'd have to say, is there any reason to stay in the trade in the direction that you saw or that you thought out here? So inside the S&P right now, it looks like what we ought to see is a move up to about 1940.50. That's the 0.618 retracement level. That is the retracement level coming from the high out here on the 120-minute chart. That was at 12 noon. That was on the trading session of June 9th. So if we go from that high down to the low out here that took place, that's at about 4 p.m., and that was on June the 12th out here. The ES Mini looks like it wants to travel up to about the 1940. 50 area, that would be your 0.618 retracement. Does it mean that it stops there? No. Just means that is the next likely target area for a price to move to, and it's in a nice, strong, bullish mode out here. Now, these little, it may be difficult to see on Tiger TV. If it is, I apologize. Go join the Tiger's Den. In fact, hey, Rick, if you're listening in, the folks in the den here, they're asking about you. They like hearing your voice, and they want to see your presence in the den as well. So just to know that your friends are asking about you. I have... in the Tiger's Den, you can see the charts in nice HD. These little red boxes that you see on my screen out here, they tell us that buyers are absolutely in control. And that's important because when you have a lack of volume or other tools that you might use out there, this helps me to understand what the real message is, and it identifies strong trends out here. And on the 120-minute chart right now, it is the bulls that are in control. Folks, it is Wonderful Wednesday. Thanks so much for joining me. Have a great day. I look forward to seeing you soon. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.